Imagine waking up to breaking news. The world's two largest economies are locked in a fierce trade war. Tariffs are skyrocketing, businesses are collapsing, and global markets are in turmoil. The battle between the United States and China is no longer just about trade. It's about economic dominance, political influence, and global power. The question is, who will emerge victorious, and who will pay the price? The U.S.-China trade war has escalated into one of the most intense economic conflicts in modern history. With tariffs reaching unprecedented levels, both nations are fighting for control over global trade. The United States, under Donald Trump's leadership, has imposed tariffs as high as 145% on Chinese imports, aiming to curb Beijing's influence. In response, China has retaliated with counter-tariffs of up to 125% on American goods, sending shockwaves through international markets. But this isn't just about two superpowers. It's about the future of global trade. Nations around the world are now caught in the middle, forced to choose sides or risk economic consequences. Will this trade war lead to a new global recession, or will diplomacy prevail? Donald Trump's presidency was marked by aggressive trade policies designed to reduce America's dependence on China and bring manufacturing back to the U.S. His administration accused China of unfair trade practices, intellectual property theft, and currency manipulation, leading to a series of sweeping tariffs aimed at forcing Beijing into compliance. However, instead of backing down, China fought back with its own economic weapons. Beijing restricted exports of rare earth elements, essential for semiconductors, medical technology, and consumer electronics. It also scrapped major orders for Boeing planes and launched investigations into U.S. tech giants like Google. The result? A global trade war that has left businesses, investors, and consumers struggling to navigate the uncertainty. China's warning: the cost of siding with the U.S. As Japan, South Korea, India, and the UK explore new trade deals with the U.S., China has issued a stern warning. Any country that aligns with Washington at China's expense will face economic retaliation. Beijing has hinted at higher tariffs, restricted market access, and reduced diplomatic cooperation for nations seen as siding with the U.S. For developing economies, this presents a difficult choice. The U.S. offers lucrative trade benefits, but China remains one of the largest consumer markets in the world. Losing Chinese business could cripple industries dependent on exports, making Beijing's threat more than just political rhetoric. It's an economic reality. Impact on global markets and businesses. The trade war is already taking a toll on businesses worldwide. Manufacturing giants in Europe, Asia, and Latin America are struggling with supply chain disruptions, causing spikes in production costs and delays in shipments. Even multinational corporations with operations in both the U.S. and China are scrambling to navigate the political minefield. Stock markets have shown extreme volatility, with investors uncertain about the future of international trade. Major firms linked to Chinese imports, especially in technology, automotive, and consumer electronics, have already reported declining revenues due to tariff-related price hikes. Could this uncertainty lead to another global economic slowdown? Countries in the crossfire. Who will risk angering China? With Beijing placing economic pressure on U.S. allies, major global players find themselves caught in the middle. Japan and South Korea, heavily dependent on both American defense agreements and Chinese trade, must decide whether to prioritize security or economic stability. The UK and India, while seeking closer ties with Washington, must tread carefully, knowing that alienating China could harm their future trade prospects. Even nations outside this immediate conflict are feeling the heat. Southeast Asian countries, whose economies rely heavily on trade with both China and the U.S., now fear becoming collateral damage in this war. Should they lean toward Washington, knowing Beijing might retaliate? Or should they remain neutral and wait for tensions to settle? A new economic Cold War? The future of trade. As global alliances shift, the world may be witnessing the birth of a new economic Cold War, one where nations are forced to choose sides between two of the largest economies on the planet. Will smaller nations comply with China's demands, or will they risk economic retaliation to strengthen ties with the United States? This crisis is more than just tariffs and trade agreements. It's a battle for economic dominance, with ripple effects reaching every industry, business, and consumer worldwide. With China vowing countermeasures and the U.S. doubling down on restrictions, the future of global trade hangs in the balance. The U.S.-China trade war is no longer just about tariffs and trade restrictions. It has evolved into a geopolitical power struggle that is forcing nations to make difficult choices. With Washington pushing for stronger economic alliances and China issuing a stern warning against countries aligning with the U.S., the global stage is now more volatile than ever. China has made it abundantly clear that any country signing trade agreements with the U.S. at Beijing's expense will face economic retaliation. The warning is not just diplomatic rhetoric. It comes with severe financial consequences for nations caught in the middle of this trade war. Beijing's stance. Economic pressure as a strategic tool. China has historically relied on its economic influence to maintain global partnerships, offering low-cost manufacturing, investment opportunities, and large-scale infrastructure projects under initiatives like the Belt and Road Initiative, BRI. However, as nations move toward trade agreements with the U.S., some of which directly threaten China's dominance in key industries, Beijing has begun leveraging economic pressure to discourage deeper alliances with Washington. China's warning revolves around several key retaliatory measures, including higher tariffs and trade restrictions. Countries that sign new deals with the U.S. may face increased tariffs on their exports to China, making trade more expensive and less profitable. Investment withdrawals. China could reduce or cancel investments in nations it views as siding with the U.S., affecting industries like technology, real estate, and infrastructure development. Supply chain disruptions. By limiting access to Chinese raw materials, rare earth elements, and manufacturing hubs, Beijing could pressure companies dependent on Chinese exports. Diplomatic isolation. Nations viewed as favoring Washington might experience strained relations, making future trade negotiations, diplomatic discussions, and security agreements more complex. The overarching strategy? China is sending a message. Countries that seek closer trade ties with the U.S. must think twice before jeopardizing their economic relationships with Beijing. Why countries are hesitant to ignore China's warning. For many nations, the United States remains an attractive trade partner, offering strong technological innovation, financial stability, and economic opportunities. However, China's market is one of the largest in the world. Turning away from Beijing could mean losing billions in trade revenue and investment potential. Countries like Japan, South Korea, India, and the UK are now in a delicate balancing act, weighing the benefits of U.S. trade agreements against the risks of angering China. Japan and South Korea depend heavily on both U.S. military protection and Chinese trade partnerships, making any shift toward Washington a potential gamble with economic consequences. India, while fostering stronger ties with Washington, still relies on Chinese imports for manufacturing, pharmaceuticals, and technology, jeopardizing that trade flow could lead to domestic economic instability. The UK, seeking new post-Brexit trade agreements, must ensure it doesn't alienate China, which remains a key market for British businesses, finance, and exports. Even nations outside this immediate conflict, including Southeast Asian countries and European economies, fear being caught in the crossfire. As China increases pressure on U.S. allies, governments are facing difficult economic choices that could reshape trade routes and global supply chains. The stakes are higher than ever, and the world is watching as nations decide their next moves. As China warns countries against siding with the U.S., will global economies remain independent, or will they bow to the pressure? The future of trade will be shaped by choices made today, and the consequences will be felt for decades to come. Stay tuned for breaking updates as this high-stakes trade war unfolds.